GM, good morning. Welcome to the Milk Road Show, the daily crypto show where we deliver crypto updates smoother than your attempt at parallel parking. I'm your host, Jay Hamilton, and today we are joined by Charles Edwards, founder of Capriole Investments and renowned Bitcoin and macro expert. In today's episode, we are going to get Charles' take on where we are right now in the Bitcoin cycle, how Charles sees the rest of this cycle playing out. We're going to look at some metrics and some charts to give some indicators as to where we are headed in both the short term and the long term. And then we're going to finish and get Charles' take on how he sees future cycles playing out. Does he think this could be the last cycle of this kind and this pattern for Bitcoin, or does he think that's going to continue into the future? We're going to hear that and much more from Charles today. Before we jump in, everybody, we are hiring a few roles right now. One in particular is our new head of partnerships that we're looking for at Milk Road. If you or anyone you know is in the crypto game and wants to talk to everybody in the space, whether it be media or influencers or protocols and builders, hit the link in the show notes, check our career page, and apply for our head of partnerships role or the many other roles that we have open right now. It's bull market season, baby. Let's go. Before we jump in, we just take a minute to hear from our sponsors. Meanwhile is the world's first licensed and regulated life insurance company built for the Bitcoin economy. They do everything in BTC. You pay in BTC, they pay claims to your family in BTC. You take out policy loans entirely in BTC when you need liquidity. Protect your family from life's uncertainty and a broken financial system. Build intergenerational Bitcoin wealth while the cost of living skyrockets in dollar terms. Plus, get all the tax and legal benefits of life insurance now in Bitcoin. Visit milkroad.com/meanwhile to join the waitlist and get early access to the world's first Bitcoin life insurance. Charles, welcome to the Milk Road Show.
Great to be here. Thanks for having me.
Great to have you, my man. Okay, I want to start with a tweet that you put out just yesterday as we're recording. You said that it took 15 years for Bitcoin to get to 100K or close to 100K. When it breaks, the next 100K will likely happen in weeks. Why did you put this out there?
I provided a bit of, I did another tweet after that to provide a bit of background. But if you look at, there's a few reasons, but if you look at just gold, for example, this year, gold went up 33% in the summer. In 16 weeks, it went up about 18 to 20%, which is $3.8 trillion in just 16 weeks. And that's a really old asset, which many people obviously are not looking at the same way as Bitcoin. So for Bitcoin to go from 100K to 200K, that's just $2 trillion. So about half the amount on an asset that trades 24/7. It's more fungible, it's more divisible, more accessible to everyone around the world. And so just logically, it could easily double, I think, in a comparable time frame or less. So that's one point. The second is where we are in the cycle, where we are seasonally. And this is kind of like the optimal 2 to 4 month period, 2 to 3 months, 4 months, maybe 5 or 6 month period every 4 years. So after each halving every 4 years, you have about 12 to 18 months where you get 95% of all the cycle's returns out of every 4 years. So most of it happens in that 1 year alone. Then if you look at Q4 and Q1, that again is the majority of the returns. And then once you have like a strong monthly breakout above a prior all-time high. So for example, last cycle, that was a breakout above 20K. You tend to see at least 3 or 4 really strong positive green candles. Yeah, that's a chart I tweeted as well, where you just get insane price moves in a very short period of time. And that's because of a few reasons. You're in price discovery. Everyone who wanted to sell at the prior all-time high has, which is pretty much what we had for that 8 months of chop this summer. And you see massive price moves and the majority of the cycle gains happening in a very short period of time. So I think we'll get at least 3 or 4 really strong monthly candles. They could be distributed over a few months. It could take 6 or 12 months for them to all play out. But there's high probability of the most rapid, sizable price appreciations happening in a short period of time at present for the next few months. So this is like the really the most exciting time of every 4 years for Bitcoin.
Yeah, let's go. It's
Yeah.
certainly an exciting time for everybody. Everybody
Yeah,
wants that.
it's taken long enough to get here, right?
Yeah, if you're still here, you deserve
Yeah.
it. You deserve it.
Exactly.
You know, sit back, kick
Especially
your
after
feet
this
up, and enjoy
summer.
the ride. And if you're not allocated, get allocated now, because
Yeah.
it's as you said,
Yeah.
Charles, it's going to happen fast. When it happens real fast.
Yeah.
Let's just chat quickly about the 100K number, because that's just
Yeah.
been such a big number for a long time that has such a large impact in so many ways, right?
Yeah.
What are your thoughts on, do you think we're going to break through 100K quickly here? Do you think it's going to take some time? And once we get past 100K, do you see volatility because there will be a bunch of sellers at 100K? How do you think about that?
Yeah, so 100K is definitely the biggest hurdle we have, but probably for the rest of this cycle in terms of price appreciation. If it's for a few reasons. So it's that nice round number level, 100K, 6-digit Bitcoin, which no one's ever seen before. Also because if you just look at Fibonacci extensions, which is often natural resistance levels for price appreciation from the bottom of the last cycle, so over the last 4 years, the Fibonacci extension takes you to 102K. So again, roughly around 100K mark. And then in addition to that, I think you've got this whole investor base of TradFi that's got into the ETFs this year. So many of them obviously have no exposure to Bitcoin crypto historically. They bought Bitcoin at 40, 50, 60K. I think, they look at 100K and that would be a 80, 100% return, call it, in less than a year, which is a phenomenal return for them, probably triple what they're getting in all their other assets. And everyone sees it as a natural resistance. They'd be happy to unload there, and especially before the end of the year, and then see what happens. And I think that's what we're kind of been seeing the last couple of weeks. We also have the biggest, kind of confirming all these things, the biggest sell wall we've ever seen in the order books for Bitcoin at 100K, or between a 98K plus or minus a few $1,000s upwards. And so a lot of people are kind of looking to take profit here. And I think once that's cleared out, that's when everyone who wanted to sell has sold, and you have these really sharp, rapid vertical price appreciation moves because there's just no more supply left. But until then, 100K is a big hurdle. It could take a few weeks, could take a bit longer. The other factor is we have had quite a bit of leverage starting to build up in this zone, which isn't great. It's not too much of a cause of concern yet, but something to be monitored closely. So I'm hoping that will kind of smooth out over the next few weeks, and we just continue to grind up and take out that supply. That'd be very positive. In terms of how long it takes, it's hard to say. For example, we could wake up on Monday and Michael Saylor might have just raised $10 billion to buy Bitcoin, right? And if that happens, I think, things are going to move quite quickly. On the other hand, it could take him a bit longer now that the margins and multiples are getting a bit compressed. So remains to be seen. But it's essentially, I think, a matter of time. The best chance for it to happen is in the next few months. If it hasn't happened by February or March, I'd be a bit concerned. But I think we'll definitely be beyond 100 into the early new year.
When we hit 100K, do you think we stay above 100K, or do you think there's a chance that we chop around 100K for a while?
Yeah, so it again depends how we get to that point. I think we're doing a bit of that chopping now, so clearing out some of the supply slowly, but it's still a lot there. If we blast through, leverage and funding is low, and Michael Saylor just raised $5 billion, or if Trump announces that they're going to acquire X Bitcoin for Bitcoin Strategic Reserve, all these things will have a huge impact, and then retail and everyone else starts to front run those activities, and you see that FOMO build, and we just blast through. So it depends on all the factors and data at that point. I think there could be one or two attempts on 100 again before we actually get through. But once we get like a strong daily, weekly close, once we're above, say, 105K, for example, with strength, without excessive leverage and data that looks very concerning, then I think that's the kind of confirmation where you have a really strong trend opportunity from there.
Mm-hmm. Mm-hmm. One thing that your firm does really great is provide a lot of charts and data around Bitcoin. And one of the best ones to look at is your Bitcoin macro index, which pulls together data from 60 more than 60 on-chain and macro market metrics to try to get a single chart that we can all look at to understand the fundamental value of Bitcoin. I've pulled it up on screen. For those listening, you might want to switch over to video to take a look at this. But I would love you to walk us through this chart and explain where we're at now and what this says to you.
Yeah, so you've summarized it well. It's basically feeding in all the macro metrics and on-chain metrics that we think of the highest signal and weighting them, ML model, effectively z-scoring it, and the trend of this score is very important. So when it's going up and positive, so green on the chart here, that shows strength and growth and on-chain and confluence across various factors. Obviously that picture can turn and it could be a top forming, and when that rounds and comes down, obviously price could be lower. So it's not perfect, but it's a great fundamental gauge for Bitcoin. So as you can see now, it's getting quite elevated above 1.5, which is usually where you have the best price appreciation in each cycle. So if you just scroll slowly up to the next chart above, it's the same chart just with those colors overlaid. So you can see every time Bitcoin goes vertical, you typically have obviously that green color. So we'd expect that here, and still not early. It's not super early in that process, but not super late yet. When we're above 2 on that level, it's starting to get a bit heated. But things can they can trend into excess for a while. So the main thing to look for is when that turns down. So factors that might trigger that are long-term holders unloading. It might be other macro data, interest rates, liquidity, etc. changing. So at the moment, very strong, and the trend is your friend while it's there.
Yeah, I like that friend.
Yeah.
I like that trend right now. I'll hang out with that friend for a while, and so will the milkman. He'll join us and have a beer.
Yeah.
Okay, so all the metrics are looking good. You're feeling confident, feeling good going into the new year, and that, okay, maybe let's all expect some chop, especially around 100K. I think one thing we always remind everybody, and you can't be reminded enough, is this is still a high risk asset in the way it trades. Often we haven't yet made that transition to, we're not gold yet, where we're expecting it to drop to never drop again is an unreasonable thing. So I just want to get your take on, if you fast forward throughout the rest of this of 2025, it wouldn't be a surprise to me if we had some drawbacks. Not like, now I'm not talking about the end of this cycle. I'm just saying some drawbacks, and those could be 20%. Wouldn't surprise me. I'm not sure what you think, but that wouldn't surprise me. And I think it's important to know that. So I want to get your take on that. And then I want to get your take on, okay, what about the end of this cycle and future cycles? Are we still going to see the big bear drawback, down 60, 70%, or are those days behind us?
Yeah, good question. So normal for each bull market for Bitcoin, when you're in price discovery like this, it's normal to have 30% drawdowns every few months. So that should be expected. That said, if we look at the last 18 months, that's been almost non-existent and rare. The dips have been a lot shallower. I wouldn't bank on that. A lot of people were saying in February this year that, the volatility is lower, it's not going to happen anymore. And then we had obviously March to October, we had multiple 25% plus dips. So the volatility will be there, will come. It's obviously hard to predict when that will be, but you should be prepared for that. So, we could, if there's some concern, funding or leverage continues to rise here and we don't chip away at that sell wall, and if Michael Saylor is unable to raise capital and his multiples keep compressing, maybe we revisit 80K or potentially a bit more or less. But you have to be prepared for that kind of volatility is normal. So yeah, expect 30%, but also we might only get 15s. if it's a bit like the last year. In terms of the longer term cycle, it's hard to say. I have said a couple of times recently that I think this is the last kind of halving cycle that matters in terms of a lot of the halving cycle is driven around the mining inflation growth rate of Bitcoin, and it's so low now that's almost insignificant. And we're also now a more established asset, pretty much merging with TradFi. We're basically a TradFi asset now. And so there's a few reasons, but I just don't think that the halving cycle is going to have the same level of impact. And I think those kind of 80%, 90% every 4-year dips will get shallower and shallower. So like you said, maybe 60 might be reasonable this next time. It depends on a few factors, like the US strategic reserve. So the way it's framed at the moment is that they're just going to keep the, acquired Bitcoin that the US has from crime and other activities.
200,000? Is that
exactly? Yeah. So assuming that's the case, they don't sell it, great, but it's probably not going to help the cycle a lot. So, if that changes, I know there's some bills and proposals out there to actively acquire a lot of Bitcoin. It remains to be seen if that gets approved. Obviously Trump's got 10,000 other things that are probably more pressing on his mind to think about. So
no way. Come on. We're all that matters, right?
Yeah, exactly. So I think people forget that we're probably well down the list.
What do you think? Let me just ask you the honest question. What do you think the probability of a strategic reserve, or let's just simplify that and say America buying more Bitcoin?
That's important to differentiate.
In 25. What do you think the probability of that in 2025 is?
Like actively buying, maybe it's basically a guess here, 30%. That view again will change quickly if Trump starts talking about it, or Elon Musk or anyone. So it's important to separate, like you said, actively buying versus just having a strategic reserve, because I think people see, it's strategic reserve, they're going to buy, but it's at the moment they're just saying they're going to keep what they have. So if there's an announcement of any serious acquisition next year, even if it's not that much, right? It doesn't even have to be as much as Michael Saylor has got. You're going to see massive amount of capital flows from all global systems, banking, and countries, just because they have to remain relevant.
It basically could be. To me, the way I look at it right now is it could be the biggest catalyst of the year if it happened in 2025. But
ever.
even if even if it didn't happen, though, I still feel very, very. I'm removing it, betting it doesn't happen. Hey, if it happens, it's very on top. But everything's looking great, and then if it does happen, that's when I feel like our predictions kind of don't even know what it's like.
Exactly. I'm on the same page. So I say 30%, which is basically a guess, but I'm assuming it doesn't happen. If it does happen, I think you can forget the 80% or even 60% cycle drawdowns. I think we'll probably have a multi-year bull run instead of a 1 year. It'll probably be 2 or 3. If it doesn't happen, I think 2025 should be a really great year for Bitcoin and crypto generally. We'll just have to see how the data unfolds about how much that downside risk could be. But generally speaking, I think the dips get smaller with time as the inflation rate and the supply held by those entities is reduced with time. And just the ETFs in general, right? Like they've just been sucking Bitcoin out of the system like ferociously. And I think that's basically the reason we haven't had any sizable dips this cycle compared to the prior years. So that's just TradFi onboarding, which is really still in the early stages, I think.
Why hasn't the price reacted to the ETFs as much as I think a lot of us would have assumed? It did react in the beginning. Don't get me wrong.
Yeah.
It reacted January through March. We all saw that, right? But the ETF continued to do incredibly well throughout the year, and it doesn't feel like price has reacted as much.
Yeah, it was a pretty terrible summer in terms of the sideways chop and volatility. And there's a few things. I think the price reacted amazingly in January, February with the launch, and we had this huge rally to 70K. And then like FOMO sets in, right? Like it's that typical behavior when everyone's excited and the positions get bigger and they take more risk and the leverage piles on. We saw funding rates at 5, 6, 7 times baseline, that sort of thing for a couple of weeks consistently, and that is when the risk gets really high. So that kind of just caused the whole trend to pause. Then we also had the just Q2, Q3 seasonality. So you tend to see in all risk assets, even over the last century and shorter windows with equities, that Q2 to Q3 is the worst performing period. Often equities go down. They didn't this time, but they often do. And for Bitcoin, that is also a really poor performing period for that reason. It's the old saying of, fund managers and investors going on holidays to Europe or what have you. It's also tax season, so cashing in for that. So there's a few elements there which kind of pause or cap the demand in that zone. And then we also had this massive supply unloading from Mt. Gox, which has been sitting in the background for 10 years. So they were selling, forget the number, like tons of Bitcoin, and also the German government then started selling. Mm-hmm. So there was just a lot of FUD and sell side pressure in the market, which just pinned Bitcoin down. If we didn't have that, I think we would probably be where we are now a couple of months earlier. Like I expected it would have happened July, August, and I did think there'd be some chop, but it was much more than I anticipated in hindsight, and it's because of all those factors. But in the background, you had the ETFs just continually consuming Bitcoin. We cleared through all that supply, and we didn't dip below 48K. And so at some point, when you cleared through that supply, you got that consistent demand. You got Michael Saylor as well, just buying infinite Bitcoin. When you get to that threshold, there's just no more supply. It just goes vertical, and that's what we had with the certainty following the US election when Trump was announced. And we also, that's the other factor, we cleared out that 4 years of anti-Bitcoin, anti-crypto government admin, which the last admin debanked most of our industry over the last couple of years. So there's been huge hurdles which have just been unlocked, and we went vertical, I think rightly so. So it's not surprising. It's just more surprising how long it took. And it's, again, because all those factors just kept coming out. And we now have a lot of regulatory and administrative certainty going forward, which is really positive. Pro crypto as well. And we kind of know, broadly the policies and the approach that Trump will take in terms of it's probably going to be some level of more inflation. There's going to be more spending on US businesses, support for crypto, all that sort of thing, which is just all very positive for Bitcoin as an asset class.
Mm-hmm. Yeah, completely. You mentioned Mt. Gox and the German government, which were two major supply sell-offs. And what we're seeing, when I project, we're not going to have another Mt. Gox unless, there's always a bit. Fingers crossed.
Yeah.
Seems we're done with that.
It seems unlikely. Yeah.
Seems unlikely. And it feels like governments are, which is crazy to think how short time is. Feels like governments are making the shift already, and governments are now acquiring and buying Bitcoin.
Yeah.
And obviously, as you said, the U.S. leads, and most governments will follow the U.S. And if they go first, then that will really open the floodgates.
Yeah.
But it feels like I want to be clear that those are not events that we expect to happen. We never expect events like that to happen, but they don't seem likely to happen in the next year.
Yeah, I'm definitely a lot more open-minded now than now that we know what's happening in the US. But like I said, my base case is probably not going to happen in terms of acquisition, but it could. And if it does, it's a game changer. And even if it's next year or not, it's clearly going to happen eventually, right? Like we're already now at that. We've embedded TradFi with ETFs, and we're now having this conversation at the presidential level. Kennedy and Trump, so two of the three candidates for presidency, were both actively talking about Bitcoin strategic reserves. So, whether it's not this year or next, it's coming. And it's the game theory that everyone in Bitcoin's been talking about for the last 10 years, that as soon as any sizable government starts doing this, everyone has to follow, because their currency is just going to get destroyed otherwise. So it's going to happen. And yeah, the future's very bright for Bitcoin.
The other factor here is all the corporate and institutional money as well. And I don't know about you, but I'm feeling pretty strongly that on the, my 2025 crypto bingo card is going to be a major Fortune 100 corporation announcing Bitcoin, that they're going to put Bitcoin on their balance sheet. And the impact of Google or Microsoft or Apple. I mean, we already know that Google holds a lot of assets because they run validators. So they do hold some assets, not Bitcoin, but Ethereum. And now they're not putting it on their balance sheet. It's small, right? But they have exposure, and their finance team understands it, and the board understands it, and all these things are set up. Do you think about the likelihood of that corporate and institutional side and what might happen there in the next year?
Yeah, that's also a huge unlock that's going to, I think, occur. Let's hope it's Microsoft in, 10, 11 days?
That's right. Oh, yeah, that's right. They're
voting on it soon. I think the board is suggesting not to, but at the same time, Saylor's been actively talking with them in the last week. So who knows? I suspect base case, again, probably won't happen, just because it's a probabilities thing, right? Like if you have 10 boards talking about it, maybe 2 or 3 might do it in the next few months. So, but it's going to happen. And then once you have one of these Magnificent Seven firms doing it, and they're literally allocating billions because of the size of their cash on their balance sheet, then everyone has to start copying it, because it's just, look at MicroStrategy has been the best performing equity in the S&P 500. It's not even in the S&P 500. Massively outperformed NVIDIA. It's just a process that is going to just keep unfolding, and it's a domino effect. When you have these sizable players start doing it, the smaller ones and everyone has to kind of do something to remain relevant.
Talk to me about your base case and your bull case for Bitcoin in this cycle. What do you think we could see in terms of price? What's your range?
Yeah, I think I'd be surprised if we don't get to 140K. And I think 140K is if really nothing positive's happening. We don't get any company announcements, we don't get any, allocations, investments are just below expectations. Because like I said, once we clear 105, I think we just teleport a bit. And there's no reason we shouldn't get to 140. I just don't think there'll be that much supply in that zone. And then upside, it really depends on a lot of these things we're talking about. Like I said, I can easily see 200K happening very quickly, because Bitcoin, once it clears those all-time highs in the past, it does multiples very quickly. Many assets do when they clear an all-time high. And the numbers we're talking about are way smaller than what gold did this year, and a much older, more boring asset. So we could easily get to 200. Again, it will depend on the data as things unfold. I think, like I said, we need to spend some time where we are now to clear through 100. And once that's done, then if things are looking healthy, then there's definitely tons of potential for the next 12 months.
Let's go.
It also depends on macro, though, which we haven't talked
let's touch on macro.
Yeah. In terms of like risk assets, liquidity flows generally, the Fed, all that sort of stuff. If the Fed announces, which is highly unlikely, but if they say they're going to raise rates or pause cutting, that will really affect us. Because remember, the 2021 cycle ended more or less when the Fed announced in November 21 that they're going to start raising rates. And that's pretty much when it was all over. So at the moment, that outlook looks really positive because they're cutting into a strong economy. You've got strong consumer spending. You got strong corporate profits. The unemployment rate in the US is about only 3.5% if you take out all the illegals. It is, there are some concerning factors like the yield curve uninverting typically precedes a recession. Housing starts and housing growth is still quite weak. So there are some sort of orange flags to monitor, but in the broader perspective of, strong profits, strong consumer spending, also real wages are kind of ticking up again. You got strong services industry growth in the US, and manufacturing is weak, but as I said, one of his biggest focuses is to rebuild that. So all things considered, it's really strong. The S&P 500 is pushing new all-time highs consistently, and credit spreads are really low. And credit spreads always spike in the bond market before you have any kind of real concerns. So things look really positive. Again, all this data could change day to day, week to week, but for now, the next 6-12 months looks really good. So that's a strong backdrop because Bitcoin has been highly correlated with risk assets. That said, US liquidity, so and also global M2 money supply is kind of ticking down a little bit. It's not yet like in a downtrend. It's kind of more or less chopping, but you'd want to see that at least neutral or kind of return to growth, ideally, to maintain strong trends in Bitcoin, because all these assets are, essentially trading against each other. We also have really strong dollar growth. So the DXY, which historically is not great for Bitcoin, it's been good recently, I think, just because of the Trump rally and the positive impact that with all the things we talked about, why it's good for Bitcoin. But I expect the dollar will probably continue to grow, especially if Trump starts, doing tariffs and that sort of thing, and other countries have to weaken their currencies. So that could be a potential headwind into the future. So something to monitor. All things equal, it's a great outlook for the next 6-12 months. But there are some elements that need to be watched, and all these things can affect how long the cycle lasts, how big the drawdowns are in the long term that we've talked about. And the other big factor is gold. That had, as we mentioned earlier in the podcast, it had one of its best summers ever, up 33% in a couple of months. And typically you see when there's major trends in gold, up or down, that Bitcoin will follow gold 3 to 6 months out. And I was tweeting about that all summer, that this is really positive. And it took, 4, 5, 6 months. And we've now started to follow that and close in on that. And if you just do a comparative of gold to Bitcoin, we're about halfway. So just closing in on gold's performance is going to take us to at least sort of 140K, 150K. And that should happen, like I said, in relatively short speed in the next couple of months, all else equal. And so hard assets have been performing really well. That's positive. You want to see strength in gold to support Bitcoin, and also you want to see strength in Bitcoin to support altcoins. So all the altcoin, strong crypto, alt season, whatever you want to call it, strong crypto markets are on the back of strong Bitcoin rallies. Once Bitcoin's well above 100, 120, 140, I think that's when you see also the best performance start to emerge in altcoins and other crypto assets. I think we haven't seen anything in the sort of non-Bitcoin sector until we're beyond 100K. I think it's going to blow people's minds.
And do you think that, what are your thoughts on Bitcoin dominance for this cycle? Do you think that we do have a more typical altcoin season, to call it that, and Bitcoin dominance will come down from the 59% that it's at right now? Or do you think that maybe some of these other factors, and again, I know you don't have a crystal ball, but do you think some of these other factors lead Bitcoin dominance to continue, and this is an abnormal cycle for Bitcoin?
Yeah, definitely don't have a crystal ball, so I do get some of these things wrong, of course.
Us too.
But base case, I see it coming down, but it could come down from higher. So obviously, Bitcoin dominance has just been just straight up. It's at around the 60% mark, which is usually the region where you kind of see alt season start and other assets outperform Bitcoin. And we've started to see a bit of that. I think a lot of the reason for the Bitcoin dominant strength is obviously the ETFs, and TradFi they just want to allocate to Bitcoin, BSR conversations, etc. So, Bitcoin's had a very good, strong start to the cycle, and that's actually a good thing. We want to see that to make this sustainable. But yeah, once we blow through 100K, say we're, imagine it's January, we're 120 or 130K, assuming things are more or less healthy across all the metrics we've discussed, then I think that's when you see the real flows into altcoins for a few reasons, because anyone who's been in crypto or Bitcoin for the last, call it a year to 4 years plus, they will have had massive net worth gains if Bitcoin's 130K, and they'll be looking to allocate to something else that can generate yield. So it's that old story of capital flows downstream to the smaller assets. The same with bonds to equities to gold to Bitcoin, right? And so that's why when gold as well, Bitcoin as well, I think you're seeing a lot of reallocation from gold to Bitcoin now. And then once we're well into the hundreds, you'll see that allocation start to flow downstream. You also see all the firms in TradFi that have allocated to Bitcoin ETFs and other Bitcoin investments. They all have had this awesome investment case. They'll have said, look, we've generated 150% return, whatever it is, in the last year. Guys, let's look at these other assets. They're starting to do really well. And so they'll allocate to the other Ethereum ETF, other ETFs that will probably launch, and just other altcoins generally. You'll see all these VC funds pop up again, which have basically been destroyed in the last 2 years. And just generally the return of retail. So I think people forget, like, the FTX collapse destroyed retail. And until even a month ago, I'd say retail was still destroyed. The retail flows, I did some analysis on this about a month and a half ago before the election, when we're in sort of 60, 70K range. There's basically no retail activity on exchange. Everything that was happening was in meme coins, and meme coins, while they've done extremely well in the last year, is still a tiny, tiny percentage of this whole asset class. It's like 3 or 4% or something. So that was booming, but it was mostly people already in crypto, and the new retail flows are basically non-existent. So you see a lot more retail flows starting to appear since we've hit 80, 90K, which I'd expected once we were above 80. I think the real retail flows start at 100K plus, because people who aren't in Bitcoin just cannot comprehend Bitcoin above $100,000. Like, it just doesn't process, because most people thought this was going to zero and it's a scam, and FTX and it's drug money or whatever, right? Like, that negative sentiment is all just ingrained in people in the last couple of years. And once we're above 100K, they're like, how is this possible? Like, how could I have been so wrong? And that's when you see the real flick, the switch flick, and the flows happen. And that's, again, another reason why the move from 100 to 200 it can happen very rapidly in a matter of weeks. Could be in less than a month. Yeah, definitely exciting stuff. And I think 2025 for crypto in general should be great. It should be like 2017, 2021, every 4 years, it's pretty much the same story. Yeah.
It's just, it doesn't
it's
seem
literally
fair.
The same story every time.
It doesn't seem fair that it's so predictable and such a pattern, but it has been, and there's a lot of data behind
all of that. Exactly. And that's one reason I said this is the last cycle that matters, because I think we'll get that next year. But assuming that happens, assuming Bitcoin goes to, great scenario goes to 200K, maybe more, maybe a bit less, altcoin market cap will have doubled as well, at least. This whole asset class is going to be at, $6-7 trillion, right? And that, or, maybe it's 4 to 5, 6, 7, right? Like, it's big. It's basically half gold, or almost. And so that's why over the next 4 years, maybe, again, depends on what's happening in the US government levels, but the relative amount of returns starts to diminish. It's a diminishing returns argument. And we've seen that every 4 years, that the relative returns get less and less. I think this cycle will probably be better than the last one, because we had a really bad cycle in 21 relatively. Yeah, it was very stunted. We had the Fed regime, and we also had the the US government was basically anti-crypto. So there's a lot of things, but I think this one will be better. But relatively, every subsequent 4 year cycle is going to be less upside. That said, it's still going to be one of the best performing assets over the next 10 years. I have no doubt. Yeah.
Yeah. That said, it's still
it's still going to be amazing, but like if we have this podcast in 2028, I just like it could still be a very good year, but I wouldn't expect the returns that we had this year or 4 years ago to be as comparable. Yeah, it'll be a lot smaller, basically a lot slower moving, a more choppy asset class, and slower moving in sort of 4-8 years time.
Yeah, which
is also positive. It's how it grows.
I was going to say that's a good thing. That's
exactly.
That happens because we made it.
This happens because of adoption, and we succeeded, right? Like, yeah, exactly. It becomes a world reserve asset, which is just it's tracking perfectly too.
Yeah. Fantastic. Charles, this has been a wonderful conversation. Thank you so much for your time today. Everybody listening in, I want to know how you guys are feeling. You feeling bullish? You feeling bearish? Let us know. And if you don't follow Charles on Twitter, guys, make sure you go follow Charles on Twitter. We'll throw a link to his Twitter in the show notes because he's putting out great tweets and great charts on a consistent and regular basis. Charles, deep bow to you. Thanks for your time today.
Great to be here. Thanks for having me.
Thanks for listening, and everybody, have a wicked awesome day. As always, if you liked today's episode, please hit subscribe and make sure you follow us so you don't miss out on the next one. There's also a link in the description to our free 5-minute daily newsletter where we simplify crypto for you while making you laugh. And if you're willing to step up your crypto investing game, we're going to also leave a link for Milk Road Pro. You get access to our portfolio where you can see exactly what we are buying. This is your #1 resource to help you invest successfully in crypto. One final note, this show is for educational purposes only, and nothing we say is financial advice. Investing in crypto or any asset is risky, and you should never invest more than you can afford to lose. Thanks so much for listening in, my friends. Have a wicked awesome day.